All right, Antelope Valley. Welcome back to yet another live version of Let's Talk Real Estate. Your host, Bruce B. Hailstone, the voice of real estate, here this Wednesday and every Wednesday, bringing you guys just pearls of wisdom and insight, information about how to be a better consumer and make smarter real estate answers to your questions. You know, it's doing the right thing at the right time. And today we have got an incredible speaker, has a lot of inside information. His name is Harmik Poghossian, and he is here with You Can Too Financial. Hello, Harmik.
Hello, Bruce. How are you? I hope you're doing well.
Excellent. I thank you, sir, for being here today. I'm going to do a little bit of bio stuff here in a moment, but, I'm tickled that you've joined us today. Harmik happens to be a specialist on the concept and ideas about credit and various aspects that affect your credit and how to fix your credit and how to basically make sure that you're wise about your credit use. So we're going to have a whole lot of discussion about those kinds of things. But Harmik is also a 35-plus year real estate broker, so he's got a lot of experience in the real estate industry. As a California real estate broker with over 35 years' experience in real estate sales, finance, and management, as well as development, this man was heavily involved in the short sales during the mid to late 1990s, as many of us were. 15-plus years ago, having helped hundreds and hundreds of clients with their upside-down properties, he directed his attention to helping his clients and many others across the country with their credit and debt challenges, because when the market goes south like that, it tends to leave most people pretty well battered. Today, besides continuing with his real estate operation, he also is the co-founder and chief strategist of You Can Too Financial, a premier national network marketing company that offers credit repair and other financial solution services to you, the public. We got Harmik live and in studio today. So Harmik, let's start off by talking a little bit about, the credit reporting system. It's a little crazy out there. People know a little bit about it, enough to probably get themselves in trouble, but to pique their interest. And a lot of us talk about FICO scores and the thing and like. Let's start off today talking about the past several decades and how credit cards, FICO scores, spending in the current credit crunch, how's all that come about?
Absolutely. Good question. A lot of good information. We're all familiar with credit, obviously. I'm just going to go back a little bit. Credit actually goes back to thousands of years, nothing new. However, the way we know credit, consumer credit, really only goes back to about 40-plus years. It goes to the late 60s, early 70s, when the credit reporting agencies, what used to be called credit bureaus, started organizing and kind of getting to know the game. In fact, the first credit agency was TRW, which is now called Experian. It started in 1969. What happened is over the years, these agencies started collecting a lot of information about the American consumer out there, millions and millions of people, and they have what they call the FICO people, which stands for Fair Isaac Company, as the statisticians, shall we say, that take all that data and they formulate and they come up with different ways of calculating what we call those three-digit numbers, the FICO, that measures the amount of risk involved in lending people money. So the credit agencies, the FICO people, kind of perfected their industry, where the financial institutions using the credit cards, Visas, MasterCards, etc., in the mid-90s started really expanding and giving credit cards, as we know it, to everybody and their uncle, which kind of contributed to the difficulties, challenges we're going through right now. But credit cards, mid-90s all the way through has been a major part of everyone's life. Credit agencies, the FICO scoring has been a major part where we're all familiar. So we can kind of take it from there and go forward.
A FICO score, doesn't it fluctuate for the average American? I mean, if it is that important of a number, because I think that's how we finally, as consumers, have decided to kind of keep track of, well, how am I doing credit-wise? Well, what's my FICO score?
That's right.
But it's not one number. It's a fluctuating number, kind of like on a daily basis, isn't it?
Pretty much. The credit agencies update their records every 10 days. So you are right. It is constantly fluctuating, and there are over 88 different reasons for the credit agencies to monitor, find an excuse to try to lower. And there are 5 or 6 different factors that are helping the consumer improve their credit. And these two negative and positive factors are always playing against each other. So whether you have a 30 days late on something, or you make a payment correctly on something else, or you have the right balances that they want to see, yes, every time you make a payment, every time there is anybody looking at your credit, the fluctuation of at least 5 points, 10 points, 20 points, up or down, could happen within a short period of time of a month, of 20 days, 2 months.
You know, ironic you should say that, because oftentimes a lender who's putting together a residential loan for a consumer, typically they'll pull the credit up front, but they always pull the credit again just before the close to see if you've been out on a spending binge or if you've done something wild and crazy that would affect that. So, you know, I understand what you're saying. It does fluctuate sometimes dramatically, and it's based on your choices you make on a day-to-day basis.
Absolutely.
That was interesting that you said that they updated every 10 days, because that's why in 1 month you might have multiple scores, and yet it's still me, the same person. Why would my score change? And it's because they're updating it constantly based on the choices I make.
Right on the button.
You know, now you had said that, you know, FICO scores have a major effect on our lives. Can you give some examples when we're talking major effect? How's that really affect the consumer?
Absolutely. Some people don't think about it, but if you really stop and think, they limit and expand our financial stability. They increase or decrease our quality of life. They open and close doors to employment opportunities. Some insurance rates are even affected by the FICO score. They affect our income by way of interest rates. Obviously, if you have lower FICO scores, you're paying 18, 20, 28% on interest rates and vice versa. And they absolutely limit or expand our purchasing power, whether it's a car, whether it's a house, whether it's getting another credit card. Your FICO score plays a dramatic role in such factors.
Okay, now I'm a consumer, and say I have my credit pulled, and I identify that my FICO score is 650. You know, I might not have a clue what that 650 means. What is the range? And, you know, bring that number like 650 into perspective. What would the consumer be talking about if he was told his FICO score is 650?
Right. 650 is pretty average. Somewhere between 680 to 720 is good credit. You can pretty much go into a dealership, whether it's a car, whatever, you're going to get a reasonable rate. Anything over 720 going into the 750s, 780, 800 is perfect. Anything over 800 to 850 is absolutely excellent. Anything below 650 becomes iffy. It becomes sketchy. So someone's really going to dig into the credit to see what kind of debt you have. They're going to see if there's a mortgage, there's a car payment, how responsible you are, etc. But 650 right on the button. That's pretty much average these days at least.
So that would be average, and I'm glad to say mine's a little bit higher than that, but you know, it does fluctuate, so I haven't looked at it. Now, how often should somebody be looking at their credit number? Because if it does change that radically, routinely, you know, is it something somebody should keep a pulse on? Is once a year often enough, or, you know, how common should that be?
You are right. The credit agencies generally suggest once a year. In fact, you can pull your credit reports for free. Once a year, they advertise that all over. We generally, if someone is actively pursuing a credit score, they want to keep the score high, we suggest quarterly or at least every 6 months. Because of the point that you just made, they fluctuate constantly. So if there's something that you need to start working on, there are certain factors that you can affect actually positively and drive your FICO north. You probably want to do it at least every quarter. Some people actually do checking FICO scores on a monthly basis, but that's overdoing it. If you have a purpose, if there's a reason to have that 810, 820, then you probably want to check it a lot more often than once a year.
Right, yeah, but if I check my credit, doesn't every time I check my credit have an effect on my credit number?
Yes.
We hear about that kind of stuff
that's
sometimes.
True.
You know?
You're absolutely right. It becomes an inquiry. If you are checking directly with the credit agencies as the consumer, like I said, they will give you a break. They will not counted as an inquiry, as a negative. But if you're having a mortgage company or a car loan company, finance company pull the credit, it becomes an inquiry. An inquiry is usually one negative point on the credit. But again, if you're dealing with working your 780 to an 800 or 820, it might be worth it to have 3-4 negatives if you're going to have 20-30 positives. So it all depends what your plan is, how often you're going to be looking at the credit. 6 months would be average.
Okay, that makes really good sense because, we happen to be working a property management division, so we pull credit on a pretty regular basis. And one of the things that I've noticed in that line of work is, our tenants tend to have slightly below the averages in FICOs. They tend to not be 620, 640, 650 range. They tend to be a little bit lower than that. Mm-hmm. Because if they were higher, they would probably be planning on being a buyer. Maybe they're short their down payment or something, but as a tenant, we oftentimes see the mid-500s, which is not uncommon. It just screams loudly that, they've not had the perfect credit history, right. And that's oftentimes because they've lost a house due to foreclosure, or they've maybe worked and done a short sale where they stopped making their payments. Maybe they have had a bankruptcy. There's a number of things that affect that FICO score. What kind of things can a consumer typically do to help keep that score, that number, higher than what it might have been otherwise?
Very good point, very good question. Our strong suggestion as a company is to be aware of the following points. First of all, scores are damaged by the most recently reported derogatory information. So if you have something from 2 years ago, a year and a half ago, the effect of that negative is not as much as something from 6 months ago or 2 months ago. One thing that a lot of consumers don't know, and I just mentioned it a little earlier, is that the FICO people, they have 88 negative rating factors to constantly work on pressing down your FICO score, and they give you 6 positive rating factors to help improve your FICO score. Talk about an uphill battle.
Yeah.
88 versus 6. So a consumer needs to be very aware of these points that I just made and take 5 of those positive 6 factors and work on them on an ongoing basis. We have actually educational material that we send to our consumers. We have seminars, live seminars that we do in different locations in Southern California, where we go through about 20 minutes, maybe half an hour of how to improve your FICO by doing certain things specifically. Play by the rules. Whose rules? The FICO people rules. Credit agencies' rules. When they see you do that consistently for a few months in a row, they automatically start giving you bonus positive FICO points. They start increasing your FICO on a monthly basis. You can literally drive a 550, 560 to the 600s and 700s within about a 4, 5, 6 month period.
Wow. So it is kind of like a game.
It is a game.
Yeah, but you have to be in tuned and you have to understand the stuff in order to play the rules, play the game by the rules.
Absolutely.
What are some of those factors that the consumer can actually control in elevating or making their FICO score an improvement?
Beautiful. I was waiting for you to ask that. You're right about one thing that you said a little earlier. It's a game we're playing. It's absolutely a game. It's like playing baseball. It's like playing football. Whether you like it or not, you play the game with the rules. There's a bat, you use the bat. You can't say, I'm going to use a 2x4. It's a round bat, that's what you use. There's a helmet, you have to wear the helmet. You can't say, I don't want a helmet today. So there are certain rules that you play with. In order to play the game, there are 2 rules that you first start with, and then we go into the factors. Number 1, anything that sounds pretty common sense to you as a consumer is exactly what makes sense to the credit agencies. Like an example would be if somebody says, I got 150 credit cards, the first thing that pops in your head is, why do you have 150 credit cards? No one's got 150 credit cards. I know I'm exaggerating, but that's a perfect example of common sense. The second thing is, the more boring you are, the more consistent you are, the more you do the same thing month after month, the same behavior, nothing crazy, out of whack, they like you.
The more predictable.
The more predictable, exactly. Predictable you are, the more they like you, and they follow you for about 3-4 month history. So, going back to the factors. Most people, when you ask them, how do you keep a good FICO score, they're like, I make my payments on time. True, but it's only one step in the right direction. It's like saying, how do you drive your car? Well, you get in and you stick the key in the ignition and you turn it on. Yeah, but there's other things that you're supposed to do. It's exactly the same thing here. 35% of the reason that a FICO fluctuates is because of payment history. 30%, however, has nothing to do with payment history. It has to do with amounts owed. How much do you owe on each one of those credit cards? And we're only talking about consumer credit cards. We're not talking about mortgages, no car loans, personal loans, and credit cards. 15% of the reason that FICO fluctuates is because of length of credit history. How long have you had credit? 6 months, 5 years, 10 years? 10% is because of new credit or lack of it. You really don't want to get new credit when you already have everything in place. And 10% is because of types and numbers of credit cards. If you want me, I can go into a little detail explaining every one of those factors. You start from the bottom and go up. And by doing what we ask you to do for about 3, 4 months, 5 months consistently, like you say, predictable, and they look at it and they see you doing it, it's not coincidence, it's not luck, automatically you go ahead and you have yourself a very, very good FICO score. So,
wow. Good stuff. Harmik, I'm so into this. I completely lost track of time myself. We need to go to a commercial break. Hey, ladies and gentlemen, you are listening to Let's Talk Real Estate. We got Harmik live and in studio. Grab that person that's interested in more information about credit because we're going to talk about that the rest of this hour. Be back right after these messages. Hello, Valley. Welcome back to Let's Talk Real Estate. Your host, Bruce B. Hailstone, the voice of real estate. We got live and in studio with us today, Harmik Poghossian. He is the president, co-founder of You Can Too. He's a 35-plus year real estate broker and an extremely knowledgeable individual about credit, how it works, and what we as consumers can do to repair some of our credit issues that might be what's holding us back in life. So, Harmik, before we went to this last commercial break, we were talking about the various factors that we as consumers can actually control ourselves. Let's get into a little bit more detail. You would rattle off a bunch of percentages, but let's hear those in a little bit more detail so the consumer might better understand what they can do to improve their own credit scores.
absolutely, absolutely. Obviously, there's a lot of information. I know that I'm speaking a little fast. I'm going to slow down a little bit, especially about this part. As we said before the commercial break, there are certain factors involved in doing certain things certain way on an ongoing basis to drive up the FICO and maintain a high FICO score. If you don't, the credit agencies and the FICO people are working against you. Your FICO is going down. So there is certain behavior that we have to maintain. We talked about number and types of credit cards. We talked about not getting new credit if you already have established credit, because when you do, the FICO people's antenna goes up. It's like, why did you get new credit when you already have a 10-year-old Visa with Citibank? Why did you get this and that if you have an American Express from 7 years ago, etc.? We talked about length of credit history, amounts owed, the balances that you owe, and the payment history. This is the way I'll summarize. By having a certain number of credit cards, use the same ones, don't apply for new ones, from which major or the majority of them are major credit cards. So if you have 5 to 10 credit cards and no more than 10, no less than 5, okay, you want to have at least a good majority as Visas, MasterCard, American Express, Discover. Okay, by using your cards on an ongoing basis to establish history, and that should be over 5 years. So if you have credit for about a year and a half, 7 years, 7 months, 6 months, that's not strong credit. They want to see at least a 5-year plus behavior. So you use the same cards to establish history over 5 years. You put small balances on each one of the cards. You don't use one card and pay it off at the end of the month. You use all of your cards and put small balances. However, you have to be extremely careful that the balances should be below 30% of the credit limits. So if you have a $10,000, for example, Citi card, you never want to go over $3,000. In fact, you want to keep it way below $3,000. As you do, every single month, as they see the balances below 30%, that credit card helps your FICO go up a point or two. So if you have 7 credit cards, that's 14, 15 points, 10 points every month on your FICO score going up. So you want to keep your balances down. Some people say, I really don't need my credit cards. Can you give me an ideal number, percentage, that I can put on the balances? And I show these people I know what I'm doing. The answer is 10% of your credit limit should be the balance, 10%. $10,000 credit card, you want to have about $1,000, $900 in there. You do that for about 3-4 months, they know what you're doing. You know exactly how to play the game.
And then make those payments on time.
Exactly. And every time you make the payment on time, you pay a little more than the minimum monthly payment. Nobody impresses anyone by paying a lot on the credit cards. It's just to impress yourself. The credit agencies, the FICO people, they're computers. They're looking at this. Nobody cares. So if you have a $40 payment, pay $41, pay $42, but consistently on all of the credit cards. The reason is because when they go back and they look at 3-4 month history, they see that every single payment that has come in has been more than the minimum monthly payment, which only translates to one common sense factor, which is you're doing well. That's it. You're doing well. If you're doing well, if you're following the rules, what happens is every 2 months, every quarter, they give you bonus points of 10, 20, 30, 40 FICO. Positive bonus points, just out of thin air. So you can take a 550, 600 FICO score for 3, 4, 5 months, do the things that we're asking you to do. And if you do need credit repair, which we're going to talk about in a minute or two, what you want to do is you want to follow the rules and take that 550 or 580 or 600 into 700, 750, 780, even 800.
And why that's so important is if you have a lower FICO credit score, you're going to be paying premium interest rates. You're going to pay premium for the things you want in life, where you might need a credit extended to the purchase acquisition of that. You're going to be paying high interest rate instead of a lower interest rate because of the fact that you've not been able to establish and prove that you're a good credit risk.
Exactly.
That's the bottom line here, isn't it?
That's it.
Interesting. Wow. As far as the numbers of cards, real interesting stuff. You said you should maintain and keep between 5 and 10, no more than 10, because then you look like a bad credit risk that if you went on a rampage of some sort, you could damage creditors. So that 10 is a maximum, and then keeping no more than 30% of the credit limit. Never exceed about 30% of that, and typically keep it down around 10% of the whole. Exactly. So if I had a $5,000 credit limit, I might want to maintain and fluctuate in and around a $500 balance and leave it on the card. Even though I'm paying those outrageous rates of interest on that card, it's showing that not only do I appreciate and respect my extended credit, but I don't mind paying a little bit of interest on it either, which that goes back to creditors like the idea that you are going to not only use their credit extension of credit, but you're also going to pay them back, and you won't mind paying back the rate of interest that comes along with that extended credit.
I will piggyback on one thing you just said. Some people ask, well, if I have a little balance, I have to pay interest. Number one, I say that is the cost of having good credit. Number two, once you start reaching the objectives of having that 780, 790, you can always call the credit card company and ask them to look at your FICO score, the credit card company, and ask them to lower your interest rate. So if you were paying 15, 16, 17%, don't be surprised if you can drive that down to 5%, 3%. So the cost of credit becomes cheaper.
All right. Hey, Harmik, we need to go to a commercial and news break. Ladies and gentlemen, you are listening to Let's Talk Real Estate. We'll be back right after these messages.
News Talk 1380.
Honey, wake up.
What's wrong?
I can't sleep. I'm worried about my car. Today on my way to pick up the kids, the car stalled in the middle of the intersection. I can't keep driving the car in that condition. We could have gotten hurt.
I know, but you know what happened last time I took it to a mechanic? He just ripped us off.
Well, then let's call Doug Beimler. My brother's been taking his car to him for years.
Your brother doesn't even live in town, and he takes his cars to Doug? Well then, let's give him a call.
In this hard economy, the last thing you need is to be ripped off. That's why Doug Beimler's QH Automotive in Lancaster provides a high standard of quality service by skilled, experienced mechanics at a fair price. Doug Beimler's QH Automotive will always honor their quotes. With over 30 years of mechanical experience and 17 years of experience to the community, Doug Beimler's QH Automotive provides routine maintenance, repair, electrical, fuel and emission systems, transmission, belts, pumps, gasket seals and hoses, engine rebuild or replacement, and more. Doug Beimler's QH Automotive on Avenue I between Sierra Highway and Division, 949-8484, or online at qhauto.com. Go see Doug, go see Doug, go see Doug.
All right, ladies and gentlemen, welcome back to Live. Let's talk real estate. Your host, Bruce B. Hailstone, the voice of real estate. And we have got in studio with us today Harmik Poghossian, who is You Can Too Financial Solutions owner. And he created this entity, and what we've been talking about today is aspects involving your credit and how to maybe improve that realm. But, we've been spending all this time talking about the FICO score and, what constitutes a good credit score versus not so good credit. It's unfortunate, but the economy is such that a lot of really good people have gotten beat up really bad in line and in light of their credit reporting.
Right.
Let's talk a little bit about credit repair because, a lot of people out there, credit repair is one of those kind of eerie kind of subjects because, unfortunately, there's a lot of folks out there who have represented themselves as quote-unquote professional credit repair people. They take $2,500, $3,500 from somebody and kind of stays in contact with you a little bit, but you're not seeing a whole lot of improvement or change in your credit score, and those people disappear. And what did they do? What didn't they do? There's got to be a better way. And I understand that You Can Too Financial Solutions has basically come up with a pretty basic program where you guys aggressively and professionally utilize the current credit reporting laws to help the average consumer improve their system. How do they go about that? Let's talk a little bit about credit repair.
Absolutely. You are right. Unfortunately, there are many companies that claim things. They're usually smaller companies, mom and pop operation within a very small geographic area. So in order to have the income, in order to maintain their well-being, they do charge a lot of money for what is very legal, very basic, very simple process. We are a national company. We operate in all 50 states, plus Puerto Rico, by the way. I have been involved with credit repair for 15 years, so this is not a fly-by-night, mom-and-pop operation. We do have our processing center right here in Southern California, and we work, as you said, very diligently with basic legal steps that are provided out there by the government, by the Fair Credit Reporting Act, by the Federal Trade Commission, in order to hold a client's hand and do the work for them. We don't want them to do anything. We do all the work for them. But we want them to be involved. We want them to be in the loop in education, in understanding what's going on with their credit. And so we do offer the credit repair at a flat fee. And if I may mention, it's only $599 for 1 full year of service. And there are reasons that we say 1 year. It doesn't take a whole year to do credit repair. It only takes a few months. On the average, it takes between 3 to 5 or 6 months on the average. Sometimes a lot sooner than that. But one flat fee. And what we do is what every consumer can do on their own.
So the consumers can actually do this themselves.
Every consumer can do it. There is no magic to it. There's no crystal ball. There is nothing.
Some consumers like to sell their own houses, for instance.
Exactly.
But there's truly benefit in hiring a professional. Some consumers like to go represent themselves in court, in pro per. But there's professionals out there that can probably do a much better job.
Exactly.
If you wanted to do surgery on yourself or be a dentist and pull your own tooth, or you can do that.
That's right.
Is it the best of ideas? Sometimes it's better to hire a professional, and that's kind of what we're talking about here. Harmik, you guys with You Can Too Financial Solutions are a professional entity that does it the way it's supposed to be done. How is it that all happens?
Well, that's I'm going to try to summarize as much as I can, obviously, with the time limitations. But I will say one thing. In order to understand credit repair, it is important to talk about credit reporting. As we already mentioned, there are 3 major credit reporting companies in the country: Experian, TransUnion, and Equifax. There are over 2,000 smaller companies, by the way, out there that do credit reporting. Good news, they buy all of their information from the big 3. So we are going to deal with the big 3. What is important to understand, the big 3 have started their business in the late 60s, early 70s. As I said earlier in the first half segment, by 1970, by 71, the government realized these are private companies that are collecting a lot of information: where you work, where you live, you're married, not married, how much money you make, or et cetera, et cetera. What happened is they said, we need to regulate all of this. It's the American consumer out there, millions of people we need to regulate. So they came up with what's called the FCRA, or the Fair Credit Reporting Act. What the act does, it spells out all of the rules and the regulations that the credit reporting agencies are supposed to follow before they put a single item in your credit, positive or negative, it doesn't matter. So before Experian can take it 30 days late, for example, from Sears or from any credit card and put it in your credit report, they must follow certain steps. The fact is that the credit reporting agencies cannot cross every T and dot every I. The reason is because they get bombarded by about 6-7 million entries, sometimes more, every single day. So what happens is there's that window of opportunity that the government, that the law, gives the consumer to go back and check on the accuracy, on verifying the accuracy of reporting of this item. There's the window. That's credit repair right there. Basically what we do is we have a very simple application that the client fills up. We get a limited power of attorney, and we go to work on behalf of the client, dealing with the credit agencies and questioning or disputing the validity, the accuracy of reporting of a negative item on the consumer's credit report. That's basically what we do. There are certain, obviously, points to this. Number one, it has to be, many cases, it has to be repeated, so you have to be consistently going back and forth. Each cycle takes about 35 to 45 days. So within the first cycle, if we're not satisfied with the response from the credit agencies, we're going to go to the second cycle, third cycle. That's the reason I give the 3 to 5 or 6 months. That's enough time to have the credit agencies go verify accuracy, and the law says if they have not followed everything to the T, they have to either correct or delete, completely delete the item from the client's credit report. That's what we do.
Okay, now hold it though. One of the problems that I've seen pretty routinely, because I've known people that have gone back and hired a mom and pop and done a little bit of credit repair. The credit that they work so hard to cure, to fix, to get rid of, sometimes they are things that aren't even that person's credit, but it's stuck to that person's social security number or their name or something,
right.
And we get it eliminated, but lo and behold, 2-3 months later it shows up again. How can that be? What's happening in that case? We thought we cured and got rid of a piece of bad credit that may or may not even been mine, but it shows back up on my credit report again. Why? Right. Why would that happen?
It is very possible. That is one of the reasons that we do this for a whole year, because we do anticipate that there might be some of those items that come back. Some of the items may be, let's say, a collection account that doesn't have a closure on it yet, so it's lingering on and on and on. Some of it could be a mistake, just like you said. It could be somebody else's item. It could be a joint account, for example, with a friend or with a spouse or someone. That is possible. But all of that falls under inaccuracies in reporting. So all we have to do is just go back again. Go back again. That repetition is what the secret is all about. Going back and making sure that we are holding the credit agencies accountable to the letter of the law.
Got it.
That's the reality of what we're doing, and it's very effective.
I see that. And I think what is going on is creditors, when they come to the point where they think they may still have a claim, but because they haven't followed the letter of the law and they have to take it out of the system and stop reporting it, don't they turn around and resell that piece of bad credit to another credit collection company? And that's oftentimes what will show back up on your credit again, I guess.
Yes, exactly.
Okay.
Another reason we do this for a whole year.
Because, yeah, right.
Yeah, exactly.
Interesting stuff. Wow. Well, so how do I go about fixing this whole thing? I've hired, say, UCAN2 Financial Solutions. I've decided I need credit fix-up because most of my credit, I may have been imperfect in the past, but I don't think it's as bad as what is being reported, and it's keeping me from getting better interest rates, getting the qualities in life that I think I should be getting. How do what happens once I've hired UCAN2 Solutions, Financial Solutions?
There is a simple enrollment form that our representative completes with the client. A copy of the address and social security verification is obtained, and payment is made in the form of credit card, check, or money order. There's one flat fee, as I said earlier, $599 for 1 full year of service, And no matter how many negative items, no matter what kind of negative items, or no matter how long they've been on the credit report, one flat fee. So whether you have charge-offs, repossessions, collections, foreclosures, student loans, bankruptcies, judgments, tax liens, lates, on and on, one flat fee for 1 full year of service. Let's make it clear again, it does not take a whole year to do credit repair, but it's good to know that the client is covered, like an insurance policy, for 1 full year. Now, we're very proactive. In order to follow through with the credit restoration process, we contact the clients every 45 to 60 days. We basically are on top of the game to make sure that they're receiving their dispute packages from the credit agencies, responses to our inquiries, our disputes, etc., in order to get the results that we want, or satisfied with the results that we want. This is not a guarantee program. I want to make that very, very clear. In fact, it's illegal. Nobody should say that they can guarantee anything in credit repair. But what I usually say to the client, I say, you have the right to go to the credit agencies and dispute or question the validity or the accuracy of reporting of an item. Can you guarantee to me that that item is going to be deleted? Just like you cannot guarantee, I cannot guarantee. I'll just do the work for you. You can drive to the airport, or you can hire a taxi to drive. You can sit in the back and be comfortable. Like you said earlier, you can cut your own hair, or you go to a hairstylist. You can fix your own car, or you go to a mechanic. You can file your own taxes, or you go to a CPA, and I can go on and on and on. We are an instrument. We are a vehicle, if you want to call it, for the consumer to use us, for us to do the work for them, and all it costs is $5.99.
And, I've seen consumers go out and work diligently at repairing their own credit. Consumers can do this, you're right. But most consumers do not have the tenacity and the stick-to-it nature and have access to the information and accounting that sometimes gets involved in this kind of stuff to do the job the way it ought to be done. Because if that bad piece of credit gets turned around and sold to another credit collection agency, the job you thought you had just finished, it's still lingering. You've still got work to do. So that's where UCAN2 Financial Solutions comes in. And you've got a boiler room of sorts where you've got a lot of people on the telephone using a lot of computers, I'll bet, to stay on top of the people who've signed up under your program to help them for that full 12-month period to make sure that the credit repair that's done pretty much stays in place. So I'm talking to consumers who are thinking about buying. And last thing I want is somebody to have their credit FICO score drop dramatically and them not be able to exercise a purchase. And that so often occurs if people were marginal to start with, and they're normal people. I mean, we go out and we use our credit cards, debit cards. We use the kind of credit that sometimes has an effect on those numbers and realize far too late that it had a negative effect. And now the house I thought I was going to move into, what do you mean I can't? I no longer qualify for the financing. And that is a tragedy, and it occurs out there every day. Absolutely. So we do a lot of credit counseling when somebody's thinking about buying a house.
That's right.
Getting involved with a lender, and most lenders are really astute at saying, don't change your current credit limits. If anything, pay down credit cards, but be careful. Come talk to me as your counselor to help you to do it correctly. And a lot of lenders are really good about that. The ones that are still a little green behind the ears are the ones that tend to, find out a little late that they didn't properly counsel their consumer before they went into this deal. And lo and behold, deals fall apart because of that.
Absolutely.
That's a little on the frustrating side.
Right on the button.
Hey, Harmik, we've got another quarter that we're going to deal with here shortly, but we do need to go to another commercial break. Ladies and gentlemen, you are listening to Let's Talk Real Estate. We'll be back right after these messages. All right, Antelope Valley, welcome back to Live Let's Talk Real Estate. Your host, Bruce B. Hailstone, the voice of real estate. And we're in studio today with Harmik Poghossian, and he is the real estate broker of 35-plus years. He is the owner of UCAN2 Financial Solutions, which is a company that went hand in hand. You working as a real estate broker were heavily involved in doing a lot of short sales and things like that over the decades here. And you probably, like many of us, have come to the absolute realization that, well, if you're a consumer, you're a live body, you make great income, we're not going to be able to do a whole lot for you while you're credit is all damaged and beat up because you just went through this short sale process, or you went through bankruptcy, or you went through some other financial tragedy.
Right.
So then the question is, well, we probably need some credit cleanup. I'm a really good risk. I ran into a one-time problem. I maybe filed bankruptcy, among other things. You know, folks are looking for this kind of potential avenue to help get things right again. What's kind of interesting about it is you all actually, instead of having a team of salesmen out there that are reporting to their office, you've set this program up on a opportunity that a consumer, maybe they've gone through this program, checked it out for themselves, said, wow, this really works well. There's an avenue that somebody can actually become an affiliate with you guys and actually assist you in identifying new consumers who might need this kind of work. You guys have this set up on a opportunity for the public to buy into this, to possibly even be a sales rep for you guys, right? How's that happen?
Yes, you're absolutely right. We did quite a bit of a study when we started this whole credit repair program, and we found out that a lot of people are very shy to talk about their credit. They kind of keep it confidential. You ask them, how's your credit? They say it's good. So the best way to market this to us was by using a kind of a eye-to-eye, toe-to-toe, face-to-face form of marketing, which is what's called network marketing.
Yes.
It's who you know and your circle of influence and those people's circle of influence, etc., especially, as you said, when it's a consumer that goes through the program and they see some improvements or dramatic improvements on their credit, and they become a believer and they say, I know so many people who can help. So yes, we have close to 4,000 representatives all over the country, and they are basically, you can call them personal franchisees if you want to call it, where they are a part of our marketing team. We call them independent business owners, and they receive a referral fee or a commission for every one of the 599 credit applications that they turn in. So if somebody has a cousin, a neighbor, a coworker, an associate, or someone, or themselves that they want to sign up for the program, they receive a $200 referral fee or a commission for every 599 credit repair that they turn in. The client pays the fee, you receive the commission, we do the work. It's very important because some people figure they have to learn, they have to go through trainings, they have to understand credit, etc. We say no. There's enough information in our websites, educational material, to give you at least a little understanding of what credit is. The detailed work, day-to-day work, working with the client, etc., it's all done in-house in our processing center, which is in Southern California. And again, this is a business opportunity. We have some folks that do 1, 2, 3 of these credit repairs a week. They make a pretty nice income. This is really not a full-time business, but definitely something on the side. And if you're going to refer someone to a nice movie you just saw on the weekend, nobody pays you for doing so. We do. That's the way we look at it. So if you're going to go tell someone, and you've experienced it yourself, the program, we do feel that you need to be rewarded. We have a tremendous training and support. We do live seminars, we do training seminars, we do webinars, go-to meetings, etc., to help our independent business owner better understand all the different services, all the different opportunities, and everything involved with You Can Too Financial. So, in a nutshell, it's a good thing, especially for today's time, today's economy, everything that's going on right now. A lot of people can utilize this.
Harmik, I love this. And listen to what I think, a basic philosophy that I think consumers are starting to get a better and better handle on. There's a concept out there called multiple streams of income.
That's right.
And today's consumer, yesterday's consumer, you got a job, you worked at the factory for 40 years, and you retired, got a gold watch, and lived off a stipend retirement, right? Today, that's not happening most anywhere. Today is a new world, and you better, as a consumer, be smart about your employment. And that concept of multiple streams of income becomes a real key factor in it all, because what happens if you get laid off from the factory? You better have several other areas in life that generate income so that you can kick a couple of those up a few notches, because there is nothing worse than all of a sudden becoming 100% unemployed. If something goes sideways beyond your control, who wants to be 100% unemployed? The idea is keep your eye open in life for other avenues that might generate some income, and make sure it's something you love. if you like out there working with people and you like that kind of networking, guess what? This may be one of those streams of income that you were looking for. Ones that maybe might not be your main stream of income to begin with, but if down the line something different occurs and your life has to change, maybe this is one of those that you want to kick up a few notches and spend a lot more time, energy, and effort developing so that it can be one of your primary streams of income. And I think that's something that today's modern worker is starting to realize. I need more than one resource, more than one source of income. And these kinds of things are really good avenues to learn enough about it to become a quasi-expert, but at the same time not having to know how the nuts and bolts of it work, because you guys got your main office where you've got worker bees that are making these kinds of connections and helping to resolve the problem and end up with that end product of a cleaner line of credit for consumers. Interesting stuff. Good
You're absolutely right. There's a beautiful video out there. It's called What's Your Plan B? It's good to have a plan A, that's your everyday thing, but it's good to have a plan B to fall back on just in case. And you're absolutely right. Everybody can use a little extra income. And in addition to the referral fee that I just mentioned, we are a network marketing company, so if anybody wants to get involved with that aspect of you can too. That's people telling more people after that. I'm benefiting from the efforts of a lot of other people. There's an old saying that says, I'd rather have 1% of 100 people's efforts than 100% on my own. This is the perfect example of that saying.
Good. And you can, too, Financial Solutions. Right. You guys do more than credit repair. Let's talk a little bit more about some of the services, because if somebody's interested and they call you after today's hour, they may be interested in some of the other aspects that you guys tend to offer. Absolutely.
The credit repair is our flagship product, so we talk about that. That's the shoe-in, if you want to call it. Everybody's interested. 99% of the people, not 99, but 9 out of 10 people, let's say they need that. It's a neat product. But being a real estate broker, having done short sales, so many of them for over so many years, especially now, right now, we have a division that handles short sales. We have a division that has the home retention program for people who want to hang on to their houses, maybe find a way through the government programs, etc. We have our debt negotiation program, which is very powerful. We have attorneys that negotiate the credit card debts, personal debt, 10 cents, 15 cents, 20 cents on a dollar with the creditors. We have a very attractive commission plan there to both help the client and also help the independent representative. We also have our corporate credit set up where we can actually set up a corporation for someone or someone who already has a corporation and get them lines of credit based on the corporate ID number rather than the Social Security. So if somebody's going through credit repair, but they have a business, they like to set up a corporation, or they are incorporated, but it's a different identity with an EIN number, we can actually build credit for that EIN number, and they can have credit cards, they can lease automobiles, etc., while they're repairing their credit. So you're right. It's a bundle of very positive, very helpful, very timely services, products. But again, I go back full circle to the credit repair, FICO education, and helping a lot of people out there and making money along the way.
All right. Hey, Harmik, I have believed in this strongly. I met you guys here a year or two ago, and we got to talking a little bit about the benefits of it. And I'm thinking to myself, well, do you know how many people I know that's got beat up credit? It's a shame. I mean, it shouldn't be that way, and yet consumers are so in the clouds as far as understanding their credit that they need this kind of education and this kind of opportunity. How do folks go about finding you guys and finding out additional information, either online and or by making a telephone call?
Absolutely. Of course, we have our toll-free telephone number that goes into the corporate office. However, I will give my direct number. It's easier to remember, and also it's more accessible so that I can know it's from our show, talk to people. And we do have representatives that can get back to you, etc. Phone number is 818 area code 500 7771. 818 area code 500 7771.
Oh, lucky number there.
Easy number.
Yeah, 818-500-7771. I memorized that just standing right here talking to you. That makes for a nice, easy number. Now, you guys also, if somebody wants to check you guys out first on the World Wide Web, it's less intimidating. You don't have to actually talk to somebody. How do folks get a hold of you online?
Very simple. It's www.poghossian, You Can Too, that's the letter U, CAN, the number 2, youcan2financial.com / every one of our representatives has his name as the follow-up after the slash. In this case, for example, it'll be Bill. He's my associate in the regional area over here. So it'll be youcan2financial.com / Bill, Bill. And there's a ton of information on credit, a ton of information on FICO, the credit agencies, opting out with the credit agencies, a million things we can do, the law, etc., etc., etc.
Interesting. Fantastic stuff. Harmik, I really appreciate all the pearls of wisdom you brought to the table today. Ladies and gentlemen, is this not the place you want to be on Wednesdays, getting wise on how to be a better consumer? I think today was an exceptional show, Harmik. I thank you very much for joining us.
My pleasure.
All right, and ladies and gentlemen, thank you for joining us here on Let's Talk Real Estate. Join us here next Wednesday, every Wednesday, and, let's talk real estate.